This is our Forex blog for August 29th, 2011, and we've enhanced our FX Trend Pro one more time by adding a new trend intensity tool. This indicator, the real-time histogram on the top, is based on 5 different statistical trend tools that all measure different things. 3 of the 5 measure the direction that each currency is going in. One of them measures the intensity over the last, I would say, 30 to 40 minutes. And the last one measures the intensity on a bar by bar basis. If the market explodes up or down on any given bar, you're going to see that spike on on one of these bars. There was tremendous weakness, or right here, strength in the yen at exactly 4.45. There's incredible momentum. And so when all 5 of these tools line up, you have what you can see here: extremely weak dollar coming up to midnight and for 2 hours after it. Very strong euro, and then weakness in the euro, and then strength at 8:30 for about an hour and a half. Strength in the CAD all day for the most part. And it's very clear, we keep enhancing this tool. One improvement we made last week, I think, enhanced this tool 30 to 40%. What we put in towards the end of the week probably enhanced it another 5 to 10%. Those enhancements, make it really clear that you want to look to sell the dollar pretty much until maybe 5:30. You want to sell the dollar against one of the stronger pairs. At 1, the euro was one of the strongest pairs. So you would be looking to buy the euro versus the dollar from 1 to about 3 o'clock. And so let's say you wanted to trade the euro, and I always believe that our new range bar charts are superior. You can see again from 1 to 3, this went up a substantial amount, 55 pips. And if you miss the beginning of the trade, it's very hard to get into it using a 5-minute chart. So one of the reasons why we've added range charts is it gives you a lot more options for when to get in. This tool right here tells you that on average, if you want to trade a 5-minute bar, the euro dollar moves about 7 pips per bar. So 7 pips per bar is a good 7R is a good range bar chart time frame to bring up. And so you can see, the euro's in a very narrow range here, and it breaks out. And when it takes out over this high here, you're in. And this bar right here is 120. In fact, 1 o'clock was even earlier than this. You would basically be looking to buy that breakout. And if you miss that first move, you can clearly see a nice little flag pattern right here to get into it. And most of the time, strong trends will go to the 1.382 fib target. And this one's very strong, so it went to the 1.618. Shot through the first one, you're out of your trade right around here at 45.45. And even if you got into this trade late, you made 30 pips. If you bought it right at the 1 o'clock when our currency meter showed you to do that, you caught another 10-15 pips. Very high probability trade. Now, what other currencies were strong while the dollar was weak? You can see the CAD was, and the daily and weekly trend are up. Unfortunately, the monthly trend's down. It always increases your odds when all the time frames line up. But pretty much the entire day the CAD was strong. And so until about 5:30, when the dollar started to get some strength right here, you'd want to sell the dollar CAD. So we'll bring up the dollar CAD chart. There's 2 entries that we primarily use: pullbacks and consolidations. Let's change this to 6 pip per bar chart. It might be a little bit less volatile than the other one. Yeah, it seems like we're missing some data. I'm going to reload this. Let me bring it up on the 5-minute chart first. All right. So you can see pretty much until 7:30, this one just keeps going down. You get little tiny pullbacks here, but the trend just continues. You wouldn't be looking to buy it, you'd be looking to sell it. One of the new tools we're releasing today, hopefully, is the FX ADX trend. And what this does is it lets you see Whoops, shoot, I didn't compile this one on the new version. Hold on. I'm running an old version that doesn't have that feature in it. 1 second. The FX ADX uses the ADX on all the different currencies and shows you statistically how strong or weak. It's more of an intermediate time frame trend, and you can adjust that, to whatever time frame you want. And I've found also that 15 is an extreme level. So let's change the dotted line to 15 here instead of 20. And so this one was trending down, but not with incredible momentum, and as you can see, it just kind of just grinds itself down. But that tool does stay red pretty much the entire time, and that's one of the tools that's in the FX Trend Pro that helps keep these trend strengths one direction. Now from 3 to 8, the euro, as you can see, is quite weak. The CAD is strong during that period. So you could be selling the euro CAD from about 3 to 8. Notice 3 o'clock right here, down till about 8. It just trends down. It doesn't go down a considerable number of pips, but it does fall about 50 pips. And again, this would be a nice one to use also on the range bar chart. Whoops. Let's just put 6 pips per bar on here. And so, from 3 o'clock on, where you're looking to sell it, if you missed the breakout of that little consolidation area here, it trended down about 40 pips, have a nice little pullback. This makes a very high odds trade. And then once it breaks the low here, you can see it just keeps trending down. You can just, every time it goes down and consolidates, yank your stop down above these consolidation highs. And most of the time, the market's not going to go beyond the fib target on the next wave down. So you keep moving your stop down. You're probably going to get stopped out right here around 62, 64. It might have worked its way down to the fib target later. Let's see. No, it never does. So, in this case, you're short here around 42.08, stopped out at 63. So you have a little bit over 40 pips. Another currency that really went strong around 7:30 right here. And notice when you see peaks like that followed by a little bit of a pullback that doesn't have half the strength. When you see the strength come back, usually you can trade that one long. And the yen was neither strong nor weak really for a couple hours, and at 8:30 it was the weakest one. One of the strongest ones here was the pound, the CAD also. So by buying the pound yen at 8:30 or CAD yen, you're going to capture some of these most intense moves. Here's 8 o'clock, and notice on the range bar chart you buy that breakout of the little flag pattern right here, and it takes off. Really, this is your first pullback. If you weren't in it before, this makes a decent trade. Or when it breaks the trend line and kind of goes sideways and breaks out, you can go long here with your stop underneath here. And by using a range bar chart, you can spot kind of this consolidation area and the spike up right here. You can draw your fibs on that, and when you get into a currency trade late, you might want to get out the first fib target. That's a pretty high odds trade. But even though it's not the most likely trade to give you 100 pips or 50 pips even, you can buy this around 20 and be out at 46 for a quick 25 pip profit with low risk. Let's look at the CAD yen. Again, we have worked tirelessly to put in code to help differentiate the strongest to weakest currencies. Here's about 8 o'clock. This one was trending up even before that. Look at the beautiful trend line underneath the lows here, which looks like it just finally broke. So this uptrend is probably over. It's very high odds trade when you're in a currency it's already trending up. The CAD, as you know, was strong all day. The yen became weak around 8, and you get this nice little pop here from 60 went all the way up to 90. So you're probably not going to have stayed in this noise right here till 90. But as you can see, it would have been very easy to make 5 to 15 pips, or you bought this pullback and made 10 pips, bought this pullback, It found support at the trend line, didn't go underneath it, and caught anywhere from 15 to 20 pips. Another one that was, mildly strong today, nothing out of the ordinary, was the Australian. You can see peaks of plus 80 with lesser weakness. And this is really how we have enhanced the tool. If most of the tools, statistical trend tools, are up, then it's going to minimize the amount of real-time weakness you see here. So you're focusing on looking to buy this against the weakest pairs. This one wasn't as strong as the euro earlier or the yen here. However, you have been focused on buying the Australian, one of the weaker ones, consistently throughout the day. The peaks are way higher than the down than they are up. You could have bought the Australian against the Swiss. And let's look at this currency from really about 4 o'clock here is when it started to go strong, and this one was weak at that point. From 4 o'clock onward, guess which direction this went? Here's 4. You bought that pullback right here, made money. Bought pullback, made money. Bought this pullback, made money. You have this nice little double, if not triple top here that does not go down. And there's obviously some selling here. When it breaks out, stops get hit, and it pushes it up another 150 pips. And this, also will be a very nice one to look at on a range bar. This looks like a more volatile currency. We'll use maybe a 9 pips per bar. Or 10, you can use whatever you want. I don't feel like bringing up that one tool that tells you the exact number of pips to use, but you're in it, and most of the time these strong trends will move at least 2 waves. So if you bought that breakout and you expected it to make one more wave up, the fib target, as you can see, did a pretty good job of snagging every pip. If you wanted to buy that breakout and get out when it went sideways here and buy it again here, here's your profit target there. And you never know if the trends are going to continue or not. So if you bought this pullback right here, which if the trend was going to continue would have made sense, you can see it went up, came down, went up, failed to make a higher high. You move your stop up a little bit, you wouldn't have lost much at all on that trade. And if you bought the next pullback down, which by the way is one of our Elliott 2-wave fib pullback systems, watch the video on our site for directions on that. You got into this trade here. This is a much more high probability trade. It's probably 70% likely to work, and you can see that shot up about 25 pips. So you would have, whatever tiny amount of 5 to 8 pips you lost here, you would have more than regained on the next one. So that's how you use our currency meter. It's been dramatically enhanced. Unfortunately, today my business partner lives in Maryland, and they got hit by flooding and power outage. So as soon as his power comes back up, we're going to be releasing this. I'll finish today's class with one more example here. At 8:30, the euro also, just like the pound, is super strong. So you'd want to be buying the euro against either the dollar really or the yen. The yen, much better trade because the dollar had strength that was very close to the 80 level, and this one really didn't. It was slightly less, and the momentum to the downside is quite a bit weaker. So the euro yen also around 8:30. Phenomenal one to be buying as well. Let's bring this up. 9 pips per bar is a little bit too much. We'll bring it back to 6. And you can see, coming up to 8 o'clock right here, it started to trend up. You might have bought the breakout here because you never know if it's in a little sideways range like that. You never really want to get in ahead of time. You might wait for confirmation here just for a little bit higher odds. And because you can use a very intelligent number of pips per bar based on past statistics for 5-minute bar, 15-minute bar, whatever you want, you can just simply put your stop a few pips underneath that bar's low, and that makes a very unlikely to be hit stop if this trend is going to continue. In other words, the noise of the market is not likely to stop you out with such a tight stop because it's based on the statistics, which we go over in our regular class. And this one just took off. Phenomenal trade. Most people probably would have got out of the trade here as it went sideways for half an hour. But somewhere around 111.70 you're out of the trade. You just made 45 pips on this trade. Another phenomenal one, which this one really showed some strength here at 8:35 and weakness right here at 8:20. And you can see the weakness that this had before was kind of running off. You probably wouldn't have been focusing as much on the euro as you would have the pound, because the last move to the upside in the pound was up, had almost no weakness. So even if you missed that first wave, let's look at this at 835. Yeah, so 835. It's still pretty far down towards the low. Yeah, it's right here. So in fact, you wouldn't have bought that break. Well, you might have still bought the breakout if you had this up. That's a very nice pattern by itself. But 835, you know, was right here, and you might have bought the breakout of that bar's high. So your stop would have been here instead. You made less, you know, 10 less pips or so. Still a good trade.